The exclusivity period for Brookfield's potential $18.4 billion deal to buy Origin Energy expires this afternoon, so we'll soon know whether Brookfield has placed a binding offer or if other bidders can now enter the race. But to understand Australia's gas market and the challenges it's facing, I'm joined by Daniel Toleman, the Principal Research Analyst, Global LNG at Wood Mackenzie. Daniel, thanks so much for your time today. This Origin deal, there's speculation it won't go ahead, but putting that to one side, if you were a foreign investor, would you be willing to tip billions of dollars into the Australian gas sector where it's sitting at the moment?
Yeah, thanks for having me, Ed. I think with foreign investment, what we're seeing is the government is intervening in the market, and this is creating a little bit of uncertainty for the market participants. And as a result, it does mean that companies are a little bit careful about the investments they're going to make. Now, we have to remember that these companies spend a lot of money building LNG plants, and they've spent a lot of money building gas projects. And the risk profile of these gas projects is quite high risk, and therefore you do want to be able to access the high market prices when they do occur. So the intervention does have consequences on the market, and it does make decisions trickier for companies.
Yeah, that intervention by the government, specifically with the price of gas on the East Coast at $12 a gigajoule, can gas companies still make a profit at that price?
Yeah, so the East Coast market is quite a complicated market. $12 is above the price that a lot of the suppliers sell gas. However, one thing that we see with that $12 price cap is there's a lot of uncertainty as to what it means. Is it at the plant where the gas producer produces the gas, or is it delivered to the market? Do you have to include that transport, which is a couple of dollars? So I think it's more that uncertainty that has created dramas. And when we're talking about profits, if we think about the LNG producers, there's an opportunity cost for those players, and $12 is currently below LNG prices.
Yeah, how much demand is there for gas in Australia at the moment, and is that just going to increase as we head towards winter in the middle of this year?
Yeah, so demand in the East Coast market is quite sticky. So it's obviously part of the energy mix, but also there's a lot of non-power gas demand, things like fertilisers, industries, metals, mining. These companies all need gas as part of their operations, and we see that demand as being quite sticky, and there isn't really an opportunity to substitute away from gas. The alternatives are diesel, which obviously burns more emissions. And so, yeah, we do see that demand in the longer term being sticky. And then the Australian gas profile is quite seasonal. Gas demand jumps up quite significantly in winter. And the reason for that is you get extra heating, extra power generation, and we see a lot lower renewable pull in those months.
Yeah, a lot of companies in the market, manufacturers in particular, have called for more supply of gas. Is the Santos Narrabri project, is that one of really the only potential projects that's out there at the moment that could boost gas supply on the East Coast?
Yeah, Santos's Narrabri project is the biggest and most advanced project in the market, and that at the moment is moving forwards, albeit at a slightly slower pace. There are a number of other supply projects also available to the market. However, these are facing challenges, and therefore they're being a little bit delayed as well. So there is opportunity for new supply to come to the market. However, the investment conditions are quite tricky for producers to take gas projects forwards. There's quite a lot of activism. Financing challenges are quite hard for gas suppliers, and at the moment, with the uncertainty in the politics, that also weighs on the decisions of these companies. So there are challenges for these projects coming forwards, and also we don't know what the role of gas is in the mind of the government, and that adds more uncertainty for these producers as well. So there are challenges for new supply. That supply is needed in the market, however.
Yeah, we also know Australia is slowly starting to transition to other energy sources, but is there a risk we're moving away from gas and coal too quickly?
I think so. I think we have to be careful with the pace of change. So what I want to see is sufficient backup if we do transition to a more renewable environment. So we need to think about the timing of shutting down coal and the timing of removing gas from the market. So if we delay new gas supply and the market is tight, there is that possibility that we'll see outages both in heating as well as power gen. So I do think we need to be careful, and as a country we need to balance our energy mix so that we have renewables, reducing the emissions, as well as low cost affordable energy.
In the past couple of months, we've seen the price cap on coal, price cap on gas, and now a carbon ceiling at $75 a tonne. This level of government intervention, is this really going to discourage global investment?
I think it has the potential to discourage investment. A lot of the companies that have spent money in the Australian gas market are also companies that are looking to invest in renewable projects. And as a result, if you see these moving goalposts, what's to say that the government won't move the goalposts again? So there is a risk that we'll see less foreign investment, and Australia does need a significant amount of money spent throughout the energy transition on things like renewable projects as well as energy distribution. So we do need that investment in our energy network to reduce the emissions.